I was talking with a client of mine earlier this week, and she was sharing with me her concerns about her assets, particularly if Donald Trump were re-elected president in the fall. Now, of course, I cannot predict the future, no one can, but I did share with her some things to think about in terms of market actions relative to what is going on in the world. The first thing is the market in general does not like surprises. So if things are anticipated, that tends to not be as market moving as if something is a surprise. So number one, I would first argue that if Donald Trump were elected in this year, that would probably be less a surprise than it was in 2016. But I would say even more important than that is the fact that it's typically business and economic conditions that drive the performance of the market more so than political conditions. It's not to say that the politics and world events don't have any impact, but they tend to be not as impactful. So let's take a look at the performance of the S&P 500 over the last few decades, and just so you can see what I mean. So let's take a look at what the biggest impact has been over the last few decades on the stock market. So you can see this is a trend of the S&P 500 over the last few decades, this chart, thanks to Morningstar and BlackRock. And on this chart, you'll see that there's many different world events that took place. And I'll focus on the 9/11 attack, you'll see here, and the trend of the market after that was up. And then you see the COVID pandemic up here, and the trend of the market is up after that. There were two downturns, which you can see here. And these were both precipitated by not world political events, but economic and business events. So we have the dot-com bubble, which is a business-triggered event, and we have the financial crisis, which is an economic and another business-triggered event.